Warren Buffett's decision to sell 510 million Apple shares is being recognized as one of the most astute moves in his illustrious investment career. This strategic decision not only reflects Buffett's deep understanding of market dynamics, but also showcases his ability to adapt his investment strategies to changing market conditions. Warren Buffett, often referred to as the Oracle of Omaha, has built his reputation on a value investing philosophy that emphasizes long-term growth, strong fundamentals, and a deep understanding of the companies he invests in. His approach is rooted in the teachings of Benjamin Graham, focusing on intrinsic value and the principle of buying undervalued stocks with the potential for long-term appreciation. Buffett's investment in Apple, which began in 2016, initially surprised many observers because he had traditionally avoided technology stocks, citing their rapid changes and uncertainties. However, Buffett recognized Apple not just as a technology company but as a consumer products company with a strong brand, loyal customer base, and robust ecosystem. This perspective aligned with his investment philosophy, leading him to make Apple one of Berkshire Hathaway's largest holdings. The decision to sell 510 million Apple shares marks a notable shift in Buffett's approach to this particular investment. While he is known for his buy and hold strategy, the sale reflects a strategic revaluation of the position, taking into account market conditions, valuation, and broader economic factors. The timing of the sale was particularly astute, coinciding with a period when technology stocks, including Apple, were experiencing high valuations. By selling a large portion of Apple shares, Buffett was able to capitalize on these high valuations, converting significant paper profits into realized gains. This move aligns with Berkshire Hathaway's broader strategy of profit harvesting, allowing the firm to lock in substantial returns while market conditions are favorable. The sale of such a large number of shares by Berkshire Hathaway has important implications for Apple's market dynamics. For years, Apple's influence in major stock indexes like the S&P 500 was somewhat muted due to Berkshire's large holding, which was not available for trading. By selling a significant portion of its Apple shares, Berkshire increased Apple's float-adjusted market capitalization, allowing its true value to be more accurately reflected in these indexes. This change is expected to prompt index funds to buy up to $40 billion worth of Apple stock during their next rebalancing, significantly boosting demand for Apple's shares. This increased demand could lead to a rise in Apple's stock price, benefiting remaining shareholders and further validating Buffett's decision to sell at a high point. One of the critical aspects of Buffett's decision to sell Apple shares is the opportunity it provides for diversification and risk management. While Apple remains a strong company with a promising future, reducing the concentration of investment in one company helps mitigate potential downside risks. This move aligns with Buffett's long-standing principle of not putting all eggs in one basket, allowing Berkshire Hathaway to spread its investments across a broader range of assets and industries. By freeing up capital through the sale of Apple shares, Berkshire Hathaway can explore other investment opportunities, whether in the form of new acquisitions, investments in undervalued companies, or other strategic initiatives. This flexibility is crucial in a rapidly changing economic environment, where new opportunities and challenges can arise unexpectedly. Buffett's decision reflects his prudent approach to managing risk while seeking opportunities for growth and value creation. The sale of Apple shares also has broader implications for Berkshire Hathaway's financial position. The realized gains from the sale contribute to Berkshire's cash reserves, which have reached record levels. This financial flexibility positions Berkshire to take advantage of future investment opportunities, whether in the form of strategic acquisitions or other ventures that align with Buffett's long-term investment philosophy. Additionally, the sale underscores Buffett's willingness to adapt his strategies in response to changing market conditions. While he is known for his long-term investment approach, this decision demonstrates his ability to recognize when it is advantageous to adjust his holdings to maximize returns and manage risk effectively. This adaptability is a hallmark of Buffett's investment style, allowing him to navigate complex market environments and capitalize on opportunities as they arise. Warren Buffett's decision to sell a significant portion of Apple shares also sets a precedent for other investors and the broader investment community. As one of the most respected and influential figures in finance, Buffett's actions are closely watched and often emulated by other investors. His decision to sell Apple shares may prompt other investors to reevaluate their own portfolios, considering factors such as market conditions, valuation, and diversification. The sale also has the potential to influence market sentiment, particularly regarding technology stocks. As investors digest the implications of Buffett's decision, there may be increased scrutiny of technology valuations and a reassessment of investment strategies. This could lead to shifts in market dynamics, with investors seeking to balance growth opportunities with risk management considerations. Warren Buffett's sale of 510 million Apple shares is widely regarded as one of the best bets of his career due to its strategic timing, impact on market dynamics, and alignment with broader investment goals. This decision highlights Buffett's expertise in navigating complex market environments and his ability to make bold, calculated moves that enhance Berkshire Hathaway's financial position. By capitalizing on high valuations, increasing Apple's market influence, and diversifying Berkshire's holdings, Buffett has once again demonstrated his prowess as a savvy investor. His decision to sell Apple shares not only reflects his understanding of market dynamics, but also reinforces his reputation as a master of long-term value creation. As Berkshire Hathaway continues to evolve and adapt to new opportunities, this move will likely be remembered as a defining moment in Buffett's storied investment career.